All right, so I guess we'll go ahead and kick this thing off. So I'm Preston. Guys, go ahead and introduce yourselves.
I'm Harry. I work at Grid.
I'm Pierre. I work at Kraken, and I'm an advisor to Riot Blockchain.
I'm Ben Gagnon. I'm Chief Mining Officer at Bitfarms.
And I'm just moderating these three gentlemen. So I want to start off telling a story about one of my personal failures. When I first started podcasting, covering Bitcoin specifically, I was always referring to this governance process. And Pierre Richard, politely told me in private, Preston, stop calling it governance. It is consensus. You don't know what you're talking about if you're calling it governance. So here we are on the governance panel, Pierre. Let's start there. Why is there that distinction? Why is that kind of probably not the right terminology when you're talking about Bitcoin?
Because Bitcoin's decentralized is really what it comes down to. And when we think about what sets the rules of Bitcoin, I think one of the biggest myths in the industry and outside the industry has been that miners set the rules of Bitcoin. Now, I don't want to minimize how important miners are. Miners are very important to the system. They provide the key functionality that Satoshi wrote about in his white paper, which is the temporal ordering of transactions so that we can have a decentralized peer-to-peer electronic cash system. And that word cash has a particular meaning. It's not about using paper dollars. It's about cash versus credit. And when you have a cash system, you have to make sure that the transactions are coming in the right order so that you don't double spend. You don't spend the same money twice. And that is the central genius of Satoshi, was creating this mining system that allows us to have a decentralized cash system. Now, the mining part, Satoshi called Bitcoin not blockchain, he called it time chain, right? And the mining part is the decentralized clock that contributes to this system being decentralized. Now, there are lots of other parts to the system, including calibrating that clock. And that is done by Bitcoin nodes. And very few people talk about Bitcoin nodes. I named my podcast Noded, that I co-host with Michael Goldstein, because nodes are central to this system, because they are the ones that tell miners, here's the difficulty that you have to meet with your hashing in order for us to accept a block from you. And nodes can reject blocks if blocks are not following the rules of the protocol. And so ultimately, it's the nodes and the node operators that provide for the decentralization of the system. Of course, nodes are software, and so like any software, they come from code, right? They're compiled from code, and there's software developers, and software developers are constantly improving it. But fundamentally, it's about who's actually running the software, the node operators, and what software they're choosing to run, what consensus rules they're choosing to use that define what Bitcoin is.
So when you're saying that, and you're thinking about who ultimately has that power, so a lot of the arguments you hear right now is that mining is becoming more centralized, that it's becoming large companies that are running it, and that would potentially threaten the decentralization of Bitcoin. But talk to people why you maybe would disagree with that threatening any type of decentralization or the consensus mechanism that's happening.
Yeah, absolutely. I mean, this is something that is core to Bitcoin, is this decentralized ethos. And I think decentralization has a lot of different meanings. Historically, we've looked at decentralization as just purely physical locations. Where are the miners located at? Where's the infrastructure located at around the world? But if you're looking at that vulnerability on a 51% attack, really, it's not the physical distribution of mining equipment that matters. It's the ownership of that mining equipment that matters, right? If I control 51% of the hash rate, I can control 51% of the hash rate all throughout the world. I don't need to control it all in one location, right? And what economies of scale are going to drive over time is obviously larger and larger mining facilities that are taking advantage of, gaps in the electrical infrastructure that can be best monetized at a grid scale by using an industrial size facility. You're not going to address an industrial size problem with a small, mom and pop kind of mining style operation. But what we're doing here now with the public companies, with public miners specifically, is we're actually starting to decentralize ownership of that hash rate through the public shares. And by decentralizing that ownership over a really, really large base of investors, we're actually, making sure that the moral hazards that would be in place for a single owner of that hash rate to try and abuse the system, they're now mitigated, right, by distributing that ownership. And so there are ways that you can still achieve the economy of scale without compromising the decentralized ethos that Bitcoin had from the beginning.
What would you guys say are the main buckets that participate in the governance or the consensus of Bitcoin?
I think that there's really sort of three swim lanes. The first lane is just users of Bitcoin, right? If you use Bitcoin, you're opting into a system. It's a voluntary opportunity for you as an individual. I think that you can then take it a step further, like Pierre described, and run a node. And then you can also mine Bitcoin and contribute hash to the network in an effort to continue to add value to the entire UTXO set. So this is a good opportunity to think about sort of where is the value accrual from achieving consensus? Why does consensus make Bitcoin useful? And the way that I think about it, at least, is that every additional terahash second is actually delivering value to the entire UTXO set broadly. And so it's not about how many hashes it takes to push one transaction on the next block. It's about what is the entire breadth of the UTXO set? Who are the people who benefit from that UTXO set on an opt-in basis? And how do those three behaviors of users, nodes, and miners, how is that delivering usefulness and value and over time, additional economic center of mass to the participation in the system?
What about, so I think those three, I don't think you'd get a complaint out of anybody on. How about adding exchanges in there? I mean, the size of some of these exchanges are so massive, and the number of accounts that they're servicing is huge. Do you see that potentially being a fourth or something that's on the outer portion that's impacting? Like, how would you quantify their role in the consensus?
Let me talk one more second about what I mean by user. So using Bitcoin means you might write software. It means you might buy Bitcoin on an exchange. You might be an exchange, but you're using Bitcoin, the technology, in order to provide utility.
Yeah.
You're just interacting with this thing. And so to me, an exchange is just a user.
Then how about, so with the SEC, and let's say that they come out, and it doesn't seem like things are moving in this direction from a policy standpoint, but let's say that here in the US or anywhere in the world, the policymakers come out and they have a really aggressive stance against it. I think the area they're going to immediately go to is the exchanges. They're going to try to regulate that in a very aggressive way. I think you're going to actually see that play out for a lot of altcoins. They're going to term them, digital asset securities. So in a way, that could become a vulnerability, or not necessarily a vulnerability, but there's an interaction there that I think that we haven't seen to date that could potentially play out in the future. Is that anything that you think is a concern or things that people need to be worried about in Bitcoin specifically?
I think in Bitcoin specifically, exchanges follow consensus. And they're not interested in rocking the boat. They want to keep clients happy and not cause controversy. And as far as government intervention, the bigger concern I have for Bitcoin specifically is pressure on publicly traded mining companies to enter into things like blacklisting or whitelisting specific addresses, and those are just not scalable approaches to solving the issues of criminal money laundering.
Yeah.
I can add on to that a little bit, I think we should make a differentiation on the regulation of exchanges with regards to Bitcoin and altcoins, because they're completely different assets. And when you view it in the legal sense, you should have different rules for Bitcoin than you would have for a securitized token, right? And anything that's a token, which really by definition is a security, that is going to be applied very, very different regulations than Bitcoin, which is not a security. I mean, it clearly does not fall under those categories. And so I think that will help keep Bitcoin a little bit more free than the pressures on the altcoin that they'll have. The commoditization of Bitcoin really does make it a completely different animal.
So Chris Larson recently had his take 2 weeks ago with the ESG piece, and one of the quotes that he had was that he needs about 50 people to change Bitcoin. They just need to step up and make those changes so that it's more ESG compliant and whatnot. Curious your takes on the 50 people to change Bitcoin.
They're not on this stage, but I think that Chris doesn't have enough familiarity with the Bitcoin development process, where really the way to make changes to Bitcoin, and let's clarify something here, because people often think that Bitcoin is ossified or that it never changes, and that's just false. In fact, last year Bitcoin had the biggest technology upgrade in the entire space, which was Taproot, and now Bitcoin has the most advanced cryptographic technology of any blockchain out there. And so when we think about why did that happen? Who did that, right? You have to first start with the protocol researchers. And the protocol researchers are thinking night and day, how do we improve Bitcoin's protocol in a way that doesn't have negative trade-offs? So they're looking for ways to improve Bitcoin's properties without having detrimental side effects on other parts of the system or other properties it has. And that's extremely difficult because Satoshi was a genius. So what he gave us was a system where there's any kind of change to it is going to cause other negative trade-offs. So what the developers have really focused in on is the smart contracting capabilities of Bitcoin and adding things like the ability to do time locks, the ability to do multi-sig. And now with Taproot, we're seeing that, and Lightning Labs just announced their protocol Taro, where you're going to be able to issue tokens on chain in Bitcoin. And it's going to be very different than other chains because it's so much more advanced. But how did that come about? It's from the researchers finding solutions that are going to be accepted not only by other developers, but by the people who run Bitcoin nodes. And the people who run Bitcoin nodes are very conservative. In fact, if you've ever gotten a pop-up on your computer that says, would you like to update your software? How many of us click not now, right? Everyone's like that. Like, we don't want to update our software. It's working fine. Leave us alone, right? And not only does Bitcoin have that, Bitcoin doesn't have the pop-up. There's no pop-up that says, would you like to upgrade your node software? You have to go out and seek it out and download it and start running it. And so the developers and the researchers are thinking about the fact that any change that they make is going to have to be voluntarily adopted by the community, sought out by the community. And so that means that they focus on soft forks. Soft forks maximize the compatibility of the protocol so that if you're running a Bitcoin node today, and recently it was really interesting, one of the Bitcoin developers ran a Bitcoin node written in 2011, and it's synced to today's block height. So that means that over the past 11 plus years of improvements to Bitcoin software, it's all been compatible. And that provides an unparalleled level of stability for people who are building on top of Bitcoin. And for people who are holding the asset Bitcoin, it gives them tremendous confidence that this protocol is built for the long term. So that's where the researchers have to think of ways of, okay, how do we upgrade this protocol while maintaining compatibility into the future? And Taproot is an excellent example of that. Now, Chris Larson has done none of the work. He's done none of the work. All he's done is say, hey, other people, do the work for me. Work for me. I'm a billionaire, but you should work for me for free. And that is so tone deaf. I think that he is completely out of his mind, and he lives kind of in a bubble of a wealthy person surrounded by yes men. And now that's fine. You know, there's plenty of examples of that throughout human history. But what really bothers me even more is the media, the mainstream media, taking this as, well, Chris Larson's right, and not really having any kind of critical view on it. I think the media, when a billionaire says something, I think the media should verify if what they're saying is the truth. And then if it's not the truth, that they should report on the fact that this billionaire is lying. So that's where I stand
Pierre,
with Chris Larson. Yeah.
it doesn't matter, right?
It doesn't matter. No, nobody, it doesn't matter. He doesn't have any code. He doesn't have any proposals. And what he's doing is he's really lobbying the government. It's not like he's actually lobbying for a real change.
But even if a person, and we can remove Chris from that, even if a person would try to lobby the government, it still doesn't matter.
No,
right?
because you got to get other people to run this software. And it's really hard to get people to run your software. They're very happy with their current Bitcoin node implementation, and so you've got to offer real value, not just browbeating.
Yeah. Ben, what are your thoughts on Chris's 50 people?
Well, you know, as soon as that came out, I put out an open challenge to Chris Larson to have a debate on this subject, because it's pretty clear to me that a lot of this comes from just a very surface level understanding of Bitcoin and energy. This is just grounded in shoddy science and bad data. The reality is that Bitcoin is a really strong driving force for good, both on energy side and environmental side. But it's really easy for people to, cherry pick certain facts or certain statistics, or a lot of times make up the statistics and cherry pick the made up statistics in order to promote their point. With Chris in particular, and this idea about, hey, we need to change the code, not the climate, not only does he not understand how these kind of implementations would work, but the reality is that, if you don't understand the reason for why you want to change the code, let alone even how to change the code, you're at such a more foundational level of understanding that you need to get to before you even try to participate in any sort of code change. And to talk about Pierre's point about the legacy aspects of Bitcoin, you compare Bitcoin improvement protocols to Ethereum improvement protocols, and just look at the numbers, right? The Ethereum improvement protocols, there's significantly more Ethereum improvement protocols, and that's not necessarily a good thing, right? Every time that you want to change this protocol, it's got to go through all sorts of debate, all sorts of discussion in Bitcoin, and it's a very slow, methodical process, because if you rush changes, that's when you make mistakes. And what we see in a lot of altcoins is, you've got to be the first one to market with this idea or with this feature or whatever, and so you rush everything in, but that complicates the process. When the internet was created over time, it's not as if we kept changing the TCP/IP protocol. It's not as if we keep changing HTTP protocol. You build other protocols on top of it, and that's what ensures that backwards compatibility. And so, this is Bitcoin's value. A lot of people think of Bitcoin as a volatile asset. That's just the price. Bitcoin is the most stable asset on the planet. We know exactly how many Bitcoins are in existence at exactly any point in time. Anybody can verify it. Anybody can predict it all the way out into the future to a precision of about a 10-minute interval. I mean, you can't tell me, nobody in this world can tell me how many US dollars exist today, how many are being printed today, how many will be printed tomorrow or the next 1, 5, 10, 100 years. With Bitcoin, we know with an exact precision, right? This is how many Bitcoins exist now. This is how many Bitcoins will exist in the future. And anybody can verify that. We only get that long-term stability by having things like a very, very slow, very methodical improvement protocol process. If this was rushed, you would lose all of that stability.
I want to, oh, sorry, Harry, go ahead.
I just want to talk about railroads briefly, because I think it's important to
That's why we're here, Harry.
understand that, think about the width of the railroad car and the track,
yeah.
and think about how many trillions and trillions and trillions of dollars of economic goods have been moved over those tracks over the last 150 years. And the reason that that system works is because nobody woke up in the morning and said, we need wider railroads, fix it now.
Yeah.
Because what would that do? It would derail every single rail car on the tracks and no one would get any of their things. And so, this is the example that I think of when we talk about a BIP, is this BIP someone screaming into the void that we need wider rail cars? Or is this, how can I put more onto the system that's already delivered trillions, if not hundreds of trillions of dollars of value over an incredibly long term?
That's right. And you mentioned anybody can verify it. And I think that that's really key. When you run a Bitcoin node, and all you have to do is you download this software and you open it up, and it downloads the blockchain. It's 400 gigabytes of data and counting. And that allows you to verify that not only are the transactions going to you and you're getting real Bitcoin, but also Bitcoin's global monetary policy, because you're downloading all of the transactions, and that's going to allow you to verify that there's never going to be more than 21 million Bitcoin. The cost of verifying today is reasonable, right? 400 gigabytes, you've got to download it, you've got to process it, so it takes CPU and RAM. And the reason that anybody can do this today is because the Bitcoin developers made a conscious effort of how do we minimize the resource usage of a node while still having it be useful in processing transactions. And huge kudos to them, because there's always a temptation of wider rail tracks. That not only does that cause problems with compatibility, it also causes problems because it's not sustainable. It's not sustainable because eventually Bitcoin's blockchain would be so big and would be so computationally intensive that only a handful, maybe 50 people could run a Bitcoin node, and that would cause the centralization that Chris thinks exists. The reality today is that hundreds of thousands of Bitcoin nodes are out there, and there could be millions, there could be billions, because the cost is so low that all you need is the motivation. You don't need to have a fortune like Chris has to run a Bitcoin node.
Yeah.
To tie on to that one last point, when Satoshi created Bitcoin, he created a near perfect product, right? Near perfect. And I think after a short amount of time, Satoshi realized very quickly that there was one flaw in Bitcoin, and that was Satoshi himself, right? Having that centralized leader, having the ability for somebody with a cult-like God status to be able to push changes or to be receiving pressure in order to push changes and influence on a system is going to completely compromise the stability and the security of the system. And so he removed himself from that equation, right? And that means that consensus is actually true and fair amongst all the different participants because they're not unduly influenced by one person, right? And that's what you have in every single altcoin.
Yeah, this is like the heart of the matter, which is if you were to remove one person from the Bitcoin ecosystem to crash the price, who would it be? Think for yourselves. Who is the one person who can crash Bitcoin if they left the industry?
Yeah.
It's nobody.
I'd like to think it was me, but
Other than Ben. $5 rent.
Stay humble.
But this is the point is that we all operate different kinds of participation in this ecosystem in service of Bitcoin continuing to be useful. That's the whole point. Is that if we can make Bitcoin more useful, we might have a chance to accumulate more onto our personal balance sheet. And the selfish, selfless act of continuing to provide value is the only way that you can be a better Bitcoiner. And so we haven't spent very much time talking about mining today, and I think that's a good thing. But that's how we view our role in the ecosystem as miners, is that the best thing we can do is provide another terahash second. And we try to do so in a way that drives enough value where we can end up with more Bitcoin than we started. But at the end of the day, we're totally subservient and subject to the rules that the nodes impose upon us, and we opt in to that position in the system.
Yeah, I think that one of the misconceptions that arose about Bitcoin's governance with regards to mining was the issue of signaling support for soft forks. And so much attention was focused on miners signaling support for soft forks in the past that it kind of drove this idea that Bitcoin's a democracy and that the voting is done by the hash rate. And that was not the intention of the developers who created the signaling mechanism. To them, the signaling was about, is the ecosystem, have they upgraded their software, and are they ready to activate a soft fork? Not, are they supportive of the soft fork? That's kind of a separate question. And so I think that with the activation of Taproot and their new mechanism of speedy trial, where it still uses miner signaling, but it's not drawn out like a long referendum, that now there's a lot more clarity about the fact that miners are there. They're there to enable upgrades and to, like everyone else, upgrade their nodes, but that they're not the ones who are determining which upgrades are going to go through and which are not.
I really like that point. And when we saw that with Taproot, I mean, I felt like it took a long time for it to finally click in because they were waiting for that signaling. So, Pierre, talk to us a little bit about the Bitcoin improvement proposal process that takes place. And so, as we change that or the community changes that, what does that look like, just so people can kind of hear that process?
Yeah, absolutely. So when a Bitcoin researcher comes up with an idea on how they could improve the Bitcoin protocol, they write what's called a BIP, a Bitcoin Improvement Proposal, and they publish it on GitHub. It's open source, so anybody can see it. And they gather feedback from other developers. They also generally mail it to the Bitcoin developer mailing list so that all the right eyes are on it in terms of providing peer review, because there's always room for improvement in any kind of suggested change to Bitcoin. If it gets past that stage of peer review and folks are excited about it, then it moves into the implementation phase, where it gets implemented as a soft fork, because in practice we haven't had any hard forks actually pass the peer review process. Because hard forks have this giant trade-off, which is that but as the name implies, it forces everyone to upgrade their node if they want to stay on the Bitcoin network. And there's questions as to whether that's even possible or not. Perhaps we'll only ever have a hard fork if there's an existential crisis that would cause that. But when it gets implemented into code, then it gets signaled by the miners of, hey, we're now running this code because we've upgraded our nodes, as well as within kind of the, let's call it the community of folks saying, yes, this is a good upgrade. Now, there have been very few upgrades, right? So we had Taproot most recently, then we had SegWit, we had the time locks, CSV, CLTV, but they've been very impactful. We saw that with the adoption of SegWit, and this is the other cool thing about Bitcoin upgrades, the adoption of them is opt-in. And so it wasn't until last year that blockchain.com finally activated SegWit for their wallets, 4 years after it had been activated on the Bitcoin mainnet. And that drove Bitcoin transaction fees down to a very low level, which I know that miners don't like that. Miners obviously want to collect their Bitcoin transaction fees, but the users of the system love it, right? That now it costs less than $1 to move Bitcoin around thanks to that SegWit upgrade. And so we'll see a similar effect with Taproot as well as adoption increases on that. People are going to more efficiently use Bitcoin's blockchain, lower their resource usage, and get lower transaction fees. So that's kind of, well, I mentioned the implementation and the miners, but it really is about users running the software, downloading it, and actually baking it into their code, into their wallets, and making use of it that kind of makes the full upgrade come to fruition.
I want to go to Ben or Harry on one of the points that Pierre just made as far as the mining reward and the fees. I mean, you can see it right there in the charts where the fees have just fell off a cliff, which as a user I absolutely love, and it's fun to open channels when there's like very minimal cost to open a channel. But how do you guys see that playing out on a much longer time frame of 5, 10, 15 years from now? What does that mean with so much moving to the Lightning Network?
No, I'm happy to take this first.
Yeah, please.
You know, as a Bitcoin miner, we're heavily invested in Bitcoin's long-term success. So I think that what's good for users is what's good for miners. You know, the amount of fees or amount of revenue that we get from transaction fees relative to the block reward is still relatively small, right? It'll increase proportionally with every halving, but it's still relatively small. And if we can drive more users to Bitcoin, we can drive more use cases of Bitcoin, we're going to drive the value, and that's going to improve our profitability and revenues more, I think, than higher transaction fees. So I don't think that's it's a negative for us. That's something that, you know, we support, and we want to encourage, you know, the efficiency of Bitcoin. And I think one of the things that happens with miners is there's a big misnomer that all we do is process transactions. That's simply not accurate, right? We process transactions, and we're also providing security. And that security element is even more important, I think, than processing the transactions themselves. You know, when you deposit your money in a bank, you expect the bank to keep your money safe, right? You also expect it to process your transactions. Now, if you have a little bit of a delay in your transactions, you're going to be a little mad. If you lose access to your funds because the bank didn't provide security, you're furious and broke, right? There's a big difference there. And in addition to processing the transactions in a block, we're also making sure that nobody is stealing your Bitcoin out of your wallet, right? We're only processing valid transactions, right? It's baked into the system that we can only process these valid transactions. And so that security aspect of things, I think, is very, very important for Bitcoin. Over time, what we've seen is that the level of sophistication in Bitcoin at all levels, whether that be at the user, the developers, the mining, it all gets incredibly more sophisticated and professional over time. What started out as hobbyists and entrepreneurs in garages quickly became, you know, startups, which are now publicly traded companies, which are now being backed by, you know, multi-international conglomerates. I mean, this is an increasing level of sophistication. And in order for Bitcoin to become the institutional asset class that it's destined to become, you have to have an institutional grade level of security. And that's only going to come from, you know, an increasing level of sophistication on the miner's part, an increasing level of, you know, corporatization on the miner side.
I want to piggyback on two things in that. The first is that a block today generates more revenue to miners on a purchasing power basis than any of the 50 Bitcoin blocks.
Yes.
So, you know, we're only getting 6 1/4, and we're able to buy a lot more power with it. So, you know, the argument that, like, you know, I need it to be fixed and I need it to be fixed right now isn't, you know, is not a Bitcoiner way to think about things.
And that's after the price has gone sideways for a year.
Yeah,
right?
And hash rate's risen.
Yeah.
You know, so like we are playing a really long game. Bitcoin is going to play a really long game, and our incentives more than anything else is for Bitcoin to be more useful to more people. And you know, we think that, you know, certainly Ben and I think that you know, providing public mining companies to shareholders is a valuable way to bring value to Bitcoin and make Bitcoin increasingly useful. And that's the whole point, is that if Bitcoin wasn't useful to people, it wouldn't be going up in price, it wouldn't be going up in number of users, it wouldn't be going up in level of sophistication. The Lightning Network wouldn't work, and you know, it wouldn't work. And so, you know, I urge folks who have heard, you know, we're worried about the long-term stability of Bitcoin because of fees, to just think about the people who are saying I need it to be fixed, and I need it to be fixed right now, and I'm not willing to describe the problem.
Yeah.
I want to follow up on that, Harry. You know, this is a great point about it working. Bitcoin worked right out of the box. It worked right out of the box. What other altcoin works right out of the box? None of them. None of them. It's always a promise that in the future we're going to develop these features and these capabilities and these partnerships. None of them work out of the box. Bitcoin always worked out of the box. It still works. It's the only thing that works at scale. You know, when Ethereum first came out, everybody was excited. Everybody said POS is 3 months away. I remember being at DevCon 2 in Shanghai in 2016, and people were laughing at me for still having Ether mining rigs because POS is coming before the end of the year. It's been 6 years. Where's POS, right? You launch a new program on Ether, crashes. Does anyone remember CryptoKitties? It doesn't work right now. right? And it hasn't worked for 6 years. Bitcoin's worked for 13 years continuously, providing value and fulfilling its mission around the globe, right? This is why we're all so passionate about it. This is why we're all so excited about it. And this is why Bitcoin is attracting some of the brightest, smartest people on the planet, people who are motivated, people who want to build things, and people who want to change the world. And I mean, this is a very, very powerful force because it just works, and it works at any scale.
We don't have much time left here. We got about 4 minutes, and I want to really cover this one because when you're talking about proof of stake, especially when you look at ESG and the media narrative that's trying to push proof of stake, when I look at where that's going with exchanges in particularly, and how exchanges are incentivized for proof of stake because they are the ones that are allowing them to stake their coins on the exchange, and then they are able to collect a cut of that. When we look at that from a governance standpoint, I think there's concerns, but I'm the moderator here. I'm curious what your concerns are with what I'm describing there from a centralization standpoint and a removal of consensus because so much power is then getting consolidated right there at the exchange.
I mean, you're just describing judge, jury, and executioner, basically, right? So if that's the role the exchange is opting into for a proof of stake network. They want to be the judge. They want to tell you what can and can't happen, how you can and can't interact with this asset. They want to be the jury, which is you're going to send an email when you can't do the thing you want to do, and they're going to rule on it. And then they're going to be the executioner. When the government in Canada tells you shut down the accounts, they're going to then say shut down the accounts. Yeah. And they're able to do that at a more fundamental and transfer level of the asset. So, think about it, from our perspective, at least on the mining side, is that, our job is to generate computing power.
Yeah.
That's the whole job. That's our role. And then there's a bunch of other people with different roles in the system that organize themselves around the functionality of Bitcoin. In this example, it's the whole thing. And Pierre, I'd love for you to comment.
I love Pierre's grin right now.
Yeah, I want you to comment as the exchange operator.
So I won't comment on that part. What I'll comment is on proof of stake specifically, which is that proof of stake from a computer science perspective has unsolved issues. And this isn't my opinion. This is kind of what is the current state of research in proof of stake, which is that stakers don't have to commit to a particular history of the transactions, unlike miners. Miners have to commit to one longest chain. Stakers can commit to an infinite number of different chains without any opportunity cost. And this makes proof of stake vulnerable to long-range attacks. And the only solution that the proof of stake proponents have come up with is having regular checkpointing. So every month, the developers will provide a checkpoint of, hey, you can't go back in history. And that is fundamentally centralizing. And so proof of work is the only decentralized consensus mechanism for providing a time chain. Proof of stake, it has severe trade-offs. And it's interesting, researchers out of Stanford came up with a solution for how to fix proof of stake. Anchor it in proof of work. So proof of stake, if it is secure, it is only because of proof of work. And so I do see it as kind of a complementary system, if anything, rather than a substitute to proof of work. But obviously, the marketing folks who are trying to portray it as something more than that are misleading people.
I think this is a good question that kind of ties everything we talked about together here at the end. The whole reason for POS is one, electricity. That's the only argument to move away from a working system to a non-working system. Is based in this idea that Bitcoin consumes too much electricity. Again, this is flawed science. You look at Bitcoin, and what you'll see in the papers is Bitcoin consumes as much energy as Argentina. That's what you'll see. One comes from a very flawed source, Digiconomist, who doesn't follow his own stated methodology in his work. Ridiculous. Two, Argentina. Why are you comparing Bitcoin's consumption as an industry to a single point on an exponential curve? It makes no sense. It's a false equivalency bias. And you're looking at a global problem like climate change, analyze it in the context of the globe. When you do that, you say, okay, well, Bitcoin's consuming about 0.1 to 0.2% of the world's electricity consumed all over the world. 0.1 to 0.2, that doesn't sound like Argentina. You know, that number is real. The Argentina seems bigger, right? When you look at how much electricity is consumed around the world for different industrial applications, then you start getting a better idea of that contextually. And you say, well, look, the greatest consumer of electricity worldwide is waste. 17% of electricity generated all around the world is waste. So you're like, okay, well, now I've got to go from 0.1 to 17%. I've got this gap that I can try and monetize here. Electricity resources that would not otherwise be consumed, monetized, or properly utilized. I can grow from 0.1 to 17% without actually affecting anything on the planet in terms of emissions. You know, at most, that's 170 times growth rate in the amount of electricity we can consume as an industry without actually changing a thing. This is completely flawed reasoning to push us to a broken system, right? The only people who push for POW to move to POS are people who have a stake in POS.
Yeah. Yeah. Well, we're out of time. Gents, amazing job. And thanks everybody for listening to our consensus panel.